Okay, hello guys, good morning. From here, 12:22 a.m. So I want to show you guys
Hello,
something
good
I
evening
posted
to
on the mentorship
you guys.
an outlook and EURUSD, and
So you
I
got now see
sent something to them on where Euro
like right here,
is
this right here.
in which I also posted it on YouTube also, but I didn't give you guys lookout entry on Euro on the YouTube channel. It was only on the mentorship. So I want you guys to look at this sell side imbalance, buy side inefficiency. You can actually see that there's no wicks right there. So this is a CB. So we marked
right
out
there
that
at the
area for Euro to react from that place to sell off. And yeah, so now let's go to our chart right here, and we go to USD. Now I've already said this previously about Euro right here, using the algorithm D range. And where did I tell you guys that the price will be drawn to? I told you guys it will be drawn to previous 3 months low, 1, 2, 3, and also previous 6 months low, which is resting right here. We haven't sell side liquidity resting below this low. So also I shared an outlook on fair value gap theory of imbalances, and I showed you guys that Euro traded into a fair value gap. I was expecting it to come here before, but then it traded to this fair value gap, so lower. Now this area on the lower time frame was where I gave out an entry in the mentorship, and it was at the 4-hour time frame, and I marked this place for them. So you can actually see that we had a sniper right there, right? Because we are very confident that price traded into a fair value gap right here. So it balanced an inefficiency. It is not in an area of liquidity. And after the balancing of price, we then get to see that we have a breaker structure. And that breaker structure, we now have an imbalance right here, a sell side imbalance, buy side inefficiency, price trade higher right there. We have Monday, we have Tuesday, and then we have Wednesday. Then we have Wednesday creating the high of the week. Now when it comes to currency pairs, the high of the week is always formed on Tuesday and Wednesday, and then the low of the week is formed on Thursday or on Friday. You can check out your charts right here. Like this one, the high of the week was formed on Tuesday. All right, just formed on Tuesday, then it traded lower down to Thursday, right? Then Friday, and then we come back again, having the high of the week right here on Wednesday, which traded into an imbalance, and that should be on a London session. So let's check if it's actually on London, on the New York session. All right, that is on the overlapping of the London and the New York session. That was where price tapped into there, and that is the New York Open. All right, it is the New York Open. All right, so we already know where the price is drawn to, and in confluence looking at the dollar index. Now, what do I mean by that? It means that we're having sell stop at this low right here. All right, price should trade below that low, and we have this imbalance right here. It could likely trade to, and this sell stop. Now, what does that mean to us? It means to us that into investment in the U.S. stock market. We have 3 stock market. We have the New York Stock Exchange, we have the Nasdaq stock market, and we have the S&P. All right, so that means that we will be avoiding buying some shares from companies. Example was BlackRock. We bought BlackRock and then we sold off when we noticed that previous 6 months high was haunted on DXY, and right here we can see the reversal right here. This is the 3 months. You can actually see the previous 3 months was haunted, and this is not a break of structure. The algorithm haunted, took liquidity from previous 3 months and then traded lower. There was no structural break. Even if you go to the weekly time frame right here, you can actually see that we did have a stop hunt right here, right? And we were expecting to see a structural break right there, okay? And the idea was that price traded into this order block, right? Now we bought from this point, price trade that up to that area, and we did not get to see a break of structure. What we actually have here was price grabbing liquidity and then mitigating still inside this area of supply. All right, then we have it range still not the breaking structure, and after that we had a structural shift right here. This right here is regarded as a confirmation entry that price wants to go lower, because we have this low, high, low, failed high, which still failed to break this high, right? It impulsively traded lower, leaving behind this area of supply, and that was where the price traded back into, and we now see it selling off. All right, so we avoided any to buy any US stock market, and also looking from the S&P 500, we also have the US 30. All right, we have the US 30, and if you check the US 30, actually you actually see what happened right here. From the US 30, we see that the price curved right here. Right now, this right here is our weekly time frame. Price trade higher, it didn't form a structure right here. We were ranging, and we know that we have this major high right here. We were expecting to see a break of market structure, which did not happen. All right, and also right here, this right here. Now price grabbed liquidity from this high, failed to break this high. It just haunted this high, so there is no confirmation that price wants to go bullish. After all, looking at this, you will know that there is no structure right here. You know, this is a ranging market. All right, there's no higher high right there. So what the price did was that it ranged right after taking sell stops right here. It ranged after also taking this sell stop right here, trade higher. All right, now it trades backwards to a fair value gap right here, and then after balancing the fair value gap, we see trade higher, range at this point, grab liquidity, hunted this high. There is no higher high and higher low. Now after that, we get to see trade into this other block, in which it took orders from the other block, and then traders left after price balance this gap. So what the algorithm is trying to do is that it collected orders right here from this other block, use the order to sell to the sell side, balance the sell side imbalance, the fair value gap right here, and we now see it reversed. All right, we now see reverse. This didn't break structure, so we won't actually be looking for a bullish market. All right, we'll actually be looking for a bullish structure. Looking right here, you actually see that we're having equals right here. All right, so now price is selling off. Price is actually selling off from that area, from the idea from our weekly time frame, and from the idea of what the dollar index did. So now where are we heading to? Now we see this high right here. Now this candle broke that high, right? So we are expecting the next candle to close above that high, but the next candle did what? Closed below this high. So that is not a confirmed break of structure from the monthly time frame, and this order block is not a valid order block. And then we're having the sell stop right here, right? So we get to see what is actually going to happen right here, and using the algorithm D range, we notice that we have equals right here. So price, the algorithm didn't break that high, it just created liquidity for it to come back to that later, and then we see it traded lower. All right, so this current month opened, it did not go higher, and now I see it going lower. What is it going for? It has already grabbed liquidity from previous month's low and did not close above it, right? So it's still selling, That means it needs to go to previous 2 months low, and we have this 3 months low. So we should actually get to watch it trade to that area. If you go to the weekly time frame, you can actually see those areas and areas that has already rebalanced. And right here we have liquidity pool resting right there. So expecting to see the US 30 trade down to that area, and if possible we might not be able to see entries again because of you can actually see how it is trading and dropping like that. Alright, so let's go to our DXY and we go to TVC. Let's look at TVC. Now I want you guys to look from your high time frame. Let's go to the 3-month time frame. The 3-month time frame right here. Alright. Now you can actually see right here on the 3-month time frame that price traded higher, right? Break this high, and you can see how the next candle closed above it, right? So now what did the algorithm do? The algorithm traded backwards, and where did it trade into? It traded into a sell side we traded into a buy side imbalance, sell side inefficiency. And on the lower time frame, you get to see, on the monthly time frame, you will get to find out that it is a fair value gap. Now, so that means what is printing now? We have this high, we have this low, and then the new high we created is this high. And when you trade into the fair value gap, we are now printed with this low. This right here is our bullish structure. It is very, very clean. You can actually see the expansion right there. Price to trace backwards to the imbalance, and we are seeing it going higher. We have this buy stop right here to target, and we are also having this buy stop on this high to target also. So we get to know if that will be a stop hunt or it's actually break to trade into this area where we're having imbalance, and then we're having this buy stop above right here, going up to the 6 month time frame right there into the imbalance, and then these buy stops. All right, so I'm always stuck at the monthly time frame right here. So this is the monthly time frame on DXY, and you can actually see right here that when price was trading higher, it's been balancing all fair value gaps. All right, it's been balancing every gap right there, but then it left this one unbalanced. So this this right here is our fair value gap that is not balanced, and price is possibly traded higher above this high, and now we have it trace backwards. All right, now this point is where we start to range. All right, and while ranging, we are creating sell side liquidity pool right here. We're using this as an area of support, and price has been ranging at that area. Seeing this, we know that we are now having an algorithm do range. All right, so now this candlestick, what did this candlestick do? It traded below previous 1 2 3 4 5 6 previous 6 months low. This low right here is the lowest low on our previous 6 months low, which have support double bottom right there. And like I always say, you always get to notice that a hunt always occur at an area where we're having double bottom, double top, triple bottom, and triple top. So that is what you actually see right here. We have the hunt, and the candlestick trade and closed above that area of liquidity. The next candle opened, did not go lower. So where are we targeting? We are targeting the highest high in previous 6 months, and the highest high in that previous 6 months is this high resting right here. That high resting right there. Now where is it now drawn to? Since the hunted 6 months high, we have 6 7 8 9 10 11 12. Its next drawn to liquidity will be our golden range of previous 12 months high. That right there is our buy stop resting right here. Gets to see the dollar index trade to hunt that buy stop right there and take orders. All right, and take orders from that area. So that is how we get to use the confluence of imbalances, the confluence of algorithm range, knowing a valid structural break, and then looking for an entries and confirmations and stuff. All right, so since this one, like I said, is trading not too clean, This is choppy, and most of the times when the algorithm is doing something like this, it's actually hard to find entry, except maybe you saw this one, and this is where you have a clean entry, because we have the expansion right there and the structural break right here. You actually see that the next candle closed above it right here, and we will trade it backwards with liquidity, tap the order block, and then we trade it higher right there. So I also want to show you guys that our course has been launched. Very cheap, very cheap, and we have up to 28 course content. All right, so right here you get to see, you get to understand what all of this means, how you get to use that in a smart money concept strategy. We have this market structure, very important. You get to know this right here, the major highs and lows, and we have to get an in-depth knowledge, in-depth understanding of what a chart of character is all about, the stop hunt, and then get to study about failed highs and lows. Also, we have the summary right there, and then you get to study liquidity. We have the retail and liquidity concepts and areas of liquidity pool, and then the trade line theory. This right here is very important. And then you get to understand what other blocks are about. We have the intro, we have the part 2, we have the part 3, and then we talk about imbalances and fair value gap theory. This right here was the one posted on the mentorship. And then you get to learn quasi-module. If you notice, I didn't teach QML on the YouTube channel. It's only for the mentorship, so you get to get an intro to QML, and also we have the part 2. Using significant support and resistance in confluence with KML, and then you have your KMT arrow. And then the most important thing is this algorithm. Study the algorithm, gain the perfection. You get to know the intro. We have the part 2, and then the important thing is to know your risk management and cash flow. And this is for those that have knowledge, already have knowledge on the basic of forex trading. I don't recommend beginners like those that are starting up forex to go for this course. It's only those that have the idea, the knowledge and understanding, and then you get to acquire the experience. All right, you get to acquire the experience of all these courses. So yeah, you have only 2 days left before we get back to it at $35. All right, so right now we have it at a very cheap price. You need it, and it's very affordable. It's very affordable. All right, so yeah, so we require you guys to go to your chart, backtest all of this stuff, and also I talked about gold also, and when I talked about gold is it's traded into a fair value gap on the daily time frame. Now I know most of you guys were thinking we're going bullish, but I've already explained this gold a long time ago. At the beginning of this year, February, I talked about gold long time ago. And right here, we traded to completely close the fair value gap, though we do have this spike right there. The week trading higher, but then the body of the candle closed below the fair value gap, and this next candle right there closing below it. And now you already know where this gold is being drawn to. We have sell stop, and we have this weekly imbalance. And if you go to your monthly time frame, you can actually see this right here is drawn to buy stops. Also right here. Now going to your 6 minutes time frame, something I've explained a long time ago. We require to see it. Let's go to the 3 minutes time frame. We require to see it go and balance itself right here. All right, you get to see go and balance itself right here. And yeah, this, I don't think this other block might hold for long. And looking at the structures right here, we know that this right here is a ranging market, and there was no structure formed right here on the 3 months time frame, including the monthly time frame. So long time ago, I predicted that EURUSD should be drawn to previous 12-month low. I refuse to delete this markup I had right here. So future draw on liquidity previous 12 months low right there. After buy stop will be hunted probably. So having this draw to liquidity right here, we get to see how long it needs to get to that area. So yeah, see you guys later on. We still give you guys updates and some content for you guys. And don't forget to get the course. I'll be posting the link on the description. And yeah, we need you guys to give a feedback, some reviews, and when you have a questions, you can reach me out on my Facebook page. Yeah, so see you guys later on. Take care of yourself and be safe.